Hello learners, let's discuss some interesting facts from the chapter Income from Other Sources. Income from other sources is the last head of income and it encompasses all incomes which cannot be accommodated in any other heads like income from salary, income from house property, business and profession, capital gains. So it gives a wide spectrum of income which are included under this head. But there are certain specific issues where the learners can take note of these things as well as can advise others so that the whole compliance of tax can be made accurately. Let's see the facts one by one. First one is the savings bank account, its interest income. If someone has observed that the sections like section 15, section 16, section 17 deals with income from salary. And then from section 22, it is income from house property, that is the second head of income. In between, some sections are missing. Actually, these sections are there when we had six heads of income. Interest on securities was the second head of income. But with the rationalization of income tax, this head of income had been abolished, and now we have only five heads of income. And that's why interest income comes under income from other sources. Regarding savings bank account, we have to say that interest that gets accumulated in your savings bank account must be declared in your tax return under income from other sources. But note that bank does not deduct TDS on savings bank interest. It is up to the taxpayer, up to the SSC to show it in the income tax return. Interest from both fixed deposits and recurring deposits is taxable, while interest from savings bank account and post office deposits are tax deductible to a certain extent. But all of these are shown in the income tax return under the head income from other sources. Interest income from a savings bank account or a fixed deposit or from a post office savings bank account are all shown under the head interest income under the head income from other sources. Now let's see the deductions on interest income under section 80 TTA. Make it clear that for a resident individual age of 60 years of less or a HUF, interest earned up to rupees 10,000 in a financial year is exempt from tax. The deduction is allowed on interest income earned from, make it clear, savings account with a bank, savings account with a cooperative society carrying on business or banking, and savings account with a post office. Remember, section 80 TTA, the deduction up to rupees 10,000 is not applicable to senior citizens. Senior citizens are not entitled to benefit under section 80 TTA. For them, there is another section 80 TTB, which I'll be discussing just next. Now let's see tax on fixed deposits. Fixed deposits interest that one receives is added along with other income that he or she has, such as salary or professional income, and he or she has to pay tax on that income at a tax rate that is applicable to him or her. TDS is deducted on interest income when it is earned, though it may not have been paid. Bank will deduct TDS on interest accrued each year on a FD of say 5 years. Therefore, it is advisable to pay taxes on annual basis instead of doing it only when the FD matures. There is an advice that income tax should be paid on annual basis rather than you wait for the FD to mature at the end and then we'll pay tax. Now let's see about the senior citizen. Section 80 TTB. Senior citizens with effect from 1st April 2018 will enjoy an income tax exemption up to rupees 50,000 on the interest income they received from fixed deposits with banks, post offices, etc. under Section 80 TTB. So mind it, 80 TTB is exclusively for senior citizens and it is on interest on fixed deposits with banks or post offices, and the deduction is as high as rupees 50,000. So please advise senior members of this particular section 80 TTB. Regarding TDS on fixed deposits, banks are required to deduct tax when income from deposits held in all bank branches put together is more than rupees 40,000 in a year. 40,000 has been made this year's budget. Prior to financial year 2019-20, it was rupees 10,000. So now from this year onwards, it is 40,000 and banks will deduct income tax from the interest on fixed deposit. A 10% TDS is deducted if PAN details are available. If PAN details are not available, then 20% will be deducted. Now see, those people, those persons who earn less than the exemption limit, they can avoid the TDS and by submitting the form 15G and 15H to the bank and requesting them not to deduct TDS. But remember, the people who are liable to pay tax, that is, whose income is more than the exemption limit, should not submit 50G or 50H, even if it is insisted by the bank. Please, 15H is for senior citizens, that is 60 years of and older, and 15G for everybody else. One thing you remember that TDS is not at all the tax which is done as a payment. TDS is only an advance thing. If your actual tax is less, you can very well show it in the return, and the income tax department now is efficient enough to refund the amount if more amount of TDS is there. So don't worry about the TDS at all. In case of TDS, you will get an entry at your 26AS, the form, and from there you can link it to your income tax return. So if more TDS is there, you will get the refund at once. Deposit reporting of fixed deposits and recurring deposits in your tax return. I may suggest that as a good citizen, you must report the earnings from fixed deposits and recurring deposits in your tax return regularly, even if there is no TDS from the side of the banker. Now let's see the family pension. Family pension, that is, if one is collecting pension on behalf of someone who is deceased, then you must show this income under the income from other sources. There is a deduction of rupees 15,000 or 1/3 of the family pension received, which is lower from the family pension income. This is added to the taxpayer incomes and tax must be paid at the tax rate that is applicable. Now there is the winnings from lottery, game shows, puzzles, which come as a windfall received. So if one receives money from winning from lottery, online, TV shows, etc., it will be taxable under the head income from other sources. The income will be taxable at the flat rate of 30%, and after adding cess, it will become 31.2%. So these are some of the issues I thought that let me discuss with you before we close the discussions on income from other sources. Thank you.